What if I told you the average millionaire isn't a Wall Street genius or a crypto trader? They're often ordinary people who built wealth through real estate. The secret isn't buying expensive homes, it's understanding how real estate creates wealth from multiple directions at once. By the end of this video, you'll know why so many investors choose property and the biggest mistakes to avoid. Let's dive in. Section 1. Real estate is more than just a house. Most people think a home is simply a place to live. Investors see something different, a wealth-building system. Unlike many investments that rely mainly on price growth, real estate can build wealth through appreciation, rental income, mortgage paydown, leverage, and inflation working in your favor. When these factors combine over time, they create powerful long-term growth. Section 2. The power of leverage. One of real estate's biggest advantages is leverage. Imagine buying a $500,000 property with a 20% down payment. You control a $500,000 asset while investing only $100,000 of your own money. If that property increases by 10%, it's worth $550,000, a $50,000 gain. Leverage can significantly boost returns, but it also increases risk if prices fall. That's why successful investors buy based on solid numbers, not emotions. Let your property help pay for itself. Rental properties add another layer of wealth. Monthly rent can help cover the mortgage, taxes, insurance, maintenance, and, if managed well, generate positive cash flow. At the same time, every mortgage payment reduces your loan balance, increasing your ownership in the property. Over the years, your equity grows while your tenant helps fund that process. Of course, rental properties also come with vacancies, repairs, and unexpected costs, so smart investors always budget for them. Section 3. Why inflation can benefit investors. Inflation usually means higher prices, but it can also benefit homeowners with fixed-rate mortgages. Your monthly mortgage payment stays the same, while rents, incomes, and property values have often increased over long periods. That means your debt becomes easier to manage over time, making inflation one of real estate's hidden advantages. Section 4. Why many people fail. If real estate is so effective, why doesn't everyone succeed? Because many people buy based on hype instead of fundamentals. They overpay, ignore repair costs, or assume prices will always rise. Successful investors focus on cash flow, location, long-term demand, and keeping financial reserves. They treat real estate like a business, not a gamble. Should you buy right now? The better question isn't, is now the right time? It's, does this property make financial sense? Interest rates, your income, job stability, and the property's numbers all matter. Great opportunities exist in every market, but only if you do the math instead of following headlines. So this is the takeaway. Real estate isn't a shortcut to becoming rich. It's a long-term strategy built on appreciation, leverage, rental income, mortgage paydown, and time. Not every property will be a great investment, and markets won't rise forever. But investors who buy quality properties, manage risk, and stay patient have historically put themselves in a strong position to build wealth. The goal isn't to own the biggest house. The goal is to understand how wealth is created. Once you understand that, you'll never look at real estate the same way again. If you found this video helpful, subscribe to Invest with Louvain for more simple, practical videos on investing, real estate, and personal finance. And let us know in the comments, if you could only choose one investment for the next 20 years, would it be real estate or the stock market?